With the housing market heating up, a lot of buyers might find themselves in a position where they're competing with others for the home that they want. And so today we're going to talk about appraisal gaps. Very simply put, an appraisal gap is just the difference between what the purchase price is on the home and where the appraisal comes in. Typically, the appraisal comes in right at what the purchase price is, but sometimes if it comes in low, that's the appraisal gap. So there's a couple different ways that we can overcome this. If you find yourself in an appraisal gap situation, sometimes what you can do is just go back to the sellers and renegotiate based on what that appraisal value came in at. However, other times they may not be willing to budge, or you won the offer because you were higher and you might have to determine how much money you're going to bring to the closing table. Now, if you have a loan program that allows you to finance 100% of the cost, the math is really easy. Let's say there's a $400,000 house and the appraised value comes in at $390,000, well, you'll simply have to bring $10,000, the difference of that appraisal gap. Now, the math gets trickier when you're using a conventional program, and let's say you have a 3% down payment. In that situation, the lender, we always look at the lower value of the appraised value versus the purchase price. So in that case, we would be able to lend up to 97% of that appraised value, which would mean that you'd have to bring, instead of $12,000 to closing, you'd have to bring $21,700 for your down payment portion of that. Now, it really gets interesting when you're already planning on putting a larger down payment down on that home. Let's say the $400,000 purchase price and you're planning 15% down. Well, if the appraised value comes in at $390,000, we can still lend up to 97% of that $390,000 as a first-time home buyer. But since your loan amount is already lower, you don't have to actually cover that gap. What happens is your loan to value goes up a little because your loan amount is higher compared to that lower value. So that makes it really nice, and sometimes you can actually write in appraisal gap coverage even if you don't have the extra cash to do so. So in that situation, really make sure to reach out to your lender to see what you can and can't do, but it does offer some really cool flexibility. So if you have any questions on appraisal gaps or anything like that, I know it can be a little confusing, just remember it always goes back to what the lender can approve based on the appraised value.